Welcome to Money in Motion by Trade the Chain. If you want more from CJ and Monte, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description.
Hello, folks, and welcome back to another edition of Money in Motion. Exciting week to break down a bunch of different stuff, so looking forward to that. A lot of fear, generally speaking, judging by the VIX, but excited to talk about that and much more. What's up, everybody in the comments? Lucas, Ross, good to hear from you, Al.
Yeah.
You guys see now? What's up, guys?
Yeah, I hope you guys all had a wonderful weekend. I know I did. It could have been a gloomy weekend. It could have been, I could have sat in my room all weekend. I didn't do that. I actually went out, saw some friends and stuff. And what was glorious was Bitcoin pumped while I was out and about and doing things. Usually I'm sitting there staring at the charts, watching it do absolutely nothing. But this weekend, while I'm out and about, I'm getting alerts that these levels are getting hit, and I'm like, man, this is a good weekend. I'm managing to get out and socialize, emerge from my den of trading, and also Bitcoin's going up. So I think, just anecdotally speaking, staring at the charts does not make them go up. And I think this weekend was a great example of that for me. So, but nonetheless, really exciting price action. We're approaching some critical levels here. We're going to talk about that. And like you said, lots of fear in the equity markets, evident from the VIX and the critical levels that are being reached by the NASDAQ. But with great fear comes great opportunity, in my opinion. And I want to talk about that a little bit. But if there's anything you'd like to start with, please go ahead, my friend.
Yeah, let's talk about positioning from last week. I'll bring this stuff up in just a sec. All right, so ES is still a short. NASDAQ is still a short, technically speaking. The only thing that's long is Dow right now. And, when we look at Russell, it's technically a short too as well. I think there was a lot of funds that had to unwind the long NASDAQ short Russell trade last week. And that's why you saw a little bit of the, squeeze to the upside. Now, look, we're oversold. We could bounce from support here, but this is something that we talked about at the start of the year, or kind of like in the midway through the year, where like the rally was going up. We saw all these people who were bearish continually shorting into the rally. And we thought about the situation where, okay, so if the S&P, once it gets back to neutral territory, what if it starts retracing, and then all those people who were bearish on the way up start to buy the dip and it doesn't go up? And then those people are weak hands, and ultimately the whole recession narrative comes back and we fall like another 10% from 4,200 to like 3,900. So, based on positioning, like you look at all the people who are long, at these levels, they've been buying the dip and haven't had any success. So, and it's like very specific people too. Like there's people who were shorting Nvidia and Tesla the entire first half of the year who are now like buying the Qs. It's like, what are you doing? It's the classic psychology of I missed the move, or I missed the run up. I underperformed my peers. So now I've got the opportunity to buy, which I didn't have at the start of the year. It's time to double up so I can make back all what I lost shorting the market to start the year. And the market just has a way of punishing those people. So ultimately, we'll see
real quick,
what happens.
CJ, I was just going to say, we can pick on specific traders, but wouldn't you say that there's a lot of people that are in that same boat as, some of those talking heads on CNBC?
Yeah. So, I mean, who cares about the talking heads about that's the only thing about, also the other thing about Twitter is like, you're always going to have perma bears and perma bulls. So it's tough to get certain sentiment. The thing about COT, which is quantifiable, is that this is the raw positioning data. We can see people are long. So regardless of people kind of, saying they're bearish or whatever, like this shows that people are long. You can't argue with this. But combining it with certain people who we knew were short at the start of the year, it just makes me very concerned is all. And so this week really for me is just going to be about avoiding disaster or potential catastrophe and just not losing money. I think this week has a potential to be like quite bad if we don't hold the 200 moving average here, which we'll see.
Yeah, we will see. That being said, and like this is a big that being said, Bitcoin still looking good. And we've talked about in the past about how it's been so frustrating watching the NASDAQ pump, watching the Qs pump, and seeing Bitcoin do virtually nothing. Now we're getting a little bit of the opposite. In fact, showing great signs of resilience. And I think that is, for me, probably the most like indication of, genuine strength coming into this market. That being said, one thing that is concerning is we did peak in volume as we cross above this 200 moving average. This was on the back of that Cointelegraph tweet, of course.
Dude, look at like the coin. Nobody trades on Bitstamp. Look at like Binance or use the index of all of the various exchanges.
Bitstamp does that. Bitstamp conglomerates exchange data. So it's going to be the same across all of them. It'll just look a little different, but yeah, I guess you're right. For volume, it doesn't really matter, but if we're looking at positioning or things like that, it would certainly matter. Although Bitstamp is a good conglomerator of data. Anyways, you can see that we're like, moving down in terms of daily volume, but we still have $10 left in today's candle, and we're approaching the critical level being 32K here. This level, we tested way back here, all the way back in what feels like forever ago in the middle of July. And since, putting that lower high that really scared a lot of people and subsequently drove price down. Now we're coming back up, and people keep talking about like the ETF being priced in, the ETF being priced in. I still don't think it is. Like, I still think that it's not very often that you have, and I can remove the chart for this. It's not very often that you have a catalyst that feels like an inevitability like we have with this iShares BlackRock ETF. Like their record with the SEC is fantastic. And I'm not going to guess when, but my degree of certainty that ETF does eventually get approved is very high. Now, like I said, I don't know when, but that being said, like the fact that we're at 30, almost 31,000, we're at 30.6 right now, with very weak equity markets and with no foreseeable, with no direct news about the ETF this morning or anything like that, we're up 2.2%. I think that's a very good sign that when that news does hit, people are saying, oh, we're just going to move up to the wick on the Cointelegraph news. Well, clearly that's not the case because we've already surpassed that level. Now you need to start thinking about new all-time highs, right? And I know that's kind of like a scary thought, but you don't need to get super aggressive with it. Like one thing that CJ and I always say is like, buy the trend, buy the breakout. If we break out above 32K, I'm going to be very bullish, especially if that's in conjunction with a weak equity market. Because when you get that sort of strength out of Bitcoin, that independent strength, it tends to be from, more spot buying and less speculative nature from like the futures market. So like right now, it's kind of a bit of a no trade zone, I'd say. Although the fact that we're seeing this much resilience against the equity markets is super encouraging. Now, if the equity markets do turn around and start to rally this week and show some signs of interim strength, I think that also would be very good for Bitcoin, because if we're seeing it up 2.2% while the S&P is down, imagine what it might look like when the S&P is up and we are more risk on, which is a possible scenario, for at least maybe a couple days this week. So, yeah, Lucas, weak equities, strong crypto excites me. I could have basically just said that and summed it all up. You put it very concisely, as you typically do. But yeah, that's it. Weak equities, strong crypto. Say less. I'm very excited about it. So, last thing I'll say before I pass it to CJ. People have been noting on Twitter this underperformance from ETH, and also in our Discord as well, talking about this ETH underperformance, and if I think it's going to last. So one thing I will say is Nick and I have been talking a lot about the ETH BTC pair. I am not in that position anymore. I don't think that's a good trade. That goes back to the inevitability of the BlackRock ETF. That's going to lead to Bitcoin outperformance and lead to Bitcoin leading the charge. That's also been the kind of status quo for coming out of most bear markets. And when we're making new all-time highs or making new local highs, it tends to be led by Bitcoin and then followed by ETH. So if I were to trade ETH, which I actually did open a position on Friday, talk about that on the show on this show. But as you can see, just look at Bitcoin and ETH, where Bitcoin is relative to its 200-day moving average, where ETH is relative to its 200-day moving average. Obviously, that's largely attributed to the BlackRock ETF. But I still think that what we historically have seen when we get this sort of price action is ETH play a game of catch up on a day when we get, positive news, when we get risk on price action, or even if just, price continues to grind up, I think we see ETH play catch up and, potentially see a few days of outperformance. So even if we don't get outperformance from ETH, I think the risk to reward to the upside is good, at least to the 200-day moving average. I think that's a good, nice target to have. And, that we're still pretty far off from that. So that's what I'm seeing from ETH. I think that, there is solid reasoning to buy here. If I were to set a stop loss, I would put it likely right below yesterday's candle body close or candle body open, and then, ride it up here, perhaps with a little bit of leverage. But yeah, I see we have some questions coming in. CJ, I'll pass back to you, my friend.
The Solana chart. All right, yeah, let's look at the Solana chart.
It's been, say what you will about Sol, baby, but this thing has been nonstop pumping. Why you guys zoom out like that?
Yeah, I don't know what we're gonna tell from the chart here. Like, it's going up, and it's like, yeah, like, a technician would say, "Oh, that's a shooting star candle. You should sell it." But it's like, really, do we care? So nothing is supposed to make sense, man. Think about all the stuff we've experienced. Like, none of it makes sense. So I gave that fight up a long time ago, Lucas.
That's a good, yeah, you got to pick your battles in this space, and I'd say that's a good fight to not pick. But what are you seeing? You put out your commodities report yesterday with some really good COT data. Anything in particular, really catching your eye this week? I know you were trading some corn futures.
Let's not call it a commodities report because no one will care about it.
COT.
It's a futures. It's a futures
report.
It's mostly equities indices. If there are any opportunities in the other more obscure markets, then we'll discuss them. But
you're right. My bad.
There was a couple. I'll worry about it. Here, let me.
Yeah, and
I covered a lot of it.
Apologies for anyone that missed the weekly roundup on Friday. We were having some issues with our email service provider, so it wasn't able to go out. And I didn't want to hit you guys with an email at like 10 o'clock on Friday night when it finally got back up. So, but yeah, sorry for interrupting. Go ahead, CJ.
Yeah, so where should we start? I guess so. Gold is interesting because I was able to exit that on Friday because we went back to neutral territory, good enough in terms of the squeeze. So At the start of the year, something that we did was, or what COT like would have had suggested was the first indice to get long would have been NASDAQ. Then the second one to trigger long was ES. Then the third was Dow. Then the fourth was Russell. So you had this kind of natural flow of capital between the indices. And by the end of the rally, when you know the Dow is like, if the Dow is outperforming NASDAQ and ES, that's probably not a good sign because it means the momentum in ES and NASDAQ is kind of waning. Similar to how you would see altcoins outperform Bitcoin at, the top of a market cycle once Bitcoin begins to stall. So how that would apply to gold here, obviously we had a nice run up and now that's kind of squeezed out. But something that I've been looking at is platinum, because it's kind of very similar. The positioning, hasn't quite squeezed yet. But like, as you can see, it's kind of slowly melting up and could potentially force a lot of shorts out if it continues to do just that, similar to kind of like the Swiss franc. So that's one that I've been looking at carefully. In terms of corn, which we talked on Friday about, I'll probably close this if it ends the day red. Yeah, I'm probably gonna close that. I got punished for chasing, didn't I? Well, good thing it was only half size, because I had a feeling that was going to happen. Then most interestingly, which we have not actually seen on COT yet for like the last year, has been gasoline. So gasoline's actually a buy. We've had people getting really short over the last few weeks, and they're shorting into this most recent uptrend that we've had. So it's interesting to me that, you have, like, I probably wouldn't be considering this if we had short signals still in crude and heating oil, but we don't. Those are back to essentially neutral levels. So it's potentially viable to look at those assets in terms of like trend following in non-crowded markets. That's not something I would do personally, but perhaps the one to play if the energy market does rebound here would be unleaded gasoline futures, or RBOB specifically. So, I'm looking at that one. But yeah, I don't know. Like I said, this week is going to be about just preservation of capital, I think, for the most part, at least when it comes to the futures. Swiss franc not really doing much.
Still like it for a long term though. I did exit my gold position, didn't exit Swiss franc. How about you?
Yeah, I think, what I might start doing, because it's very difficult to like get out of a position just because you want to take the money, and then, but the position is still viable, right? Like you technically, according to the process, you should still be in the position. It's very difficult to get back in once it runs on you.
Yeah.
So something that I'm going to consider doing and work on implementing is like hedging. So for instance, if I wanted to take some off of the Swiss franc, but like I wasn't going to because I would be worried about getting back in, we could think about a potential hedge, which would be like, it's tough though, because nothing's working. Like long dollar wouldn't work in this situation. It's down 20 basis points today.
Yeah, there's
so never mind. I'll take that back. I take it back, because I guess you could. Yeah, no.
What about Swiss franc, Japanese yen?
Yeah, no, I get that. I was thinking about that in the shower this morning, actually. But the problem is,
okay, keep that to yourself.
The problem is, it was deep thinking time. But like, I was thinking, like, it could do what the Swiss franc did in 2015 in one day. So yeah. I can't allow, like, the risk, even if the risk is like 0.1% of blowing up, I'm not gonna like knowingly take it. It's like playing Russian roulette with a gun with 1,000 barrels. It's like you become ignorant to the fact there's even a risk in there. And then I also watched Deer Hunter for the first time recently.
Oh, really?
So
yeah, you've only mentioned it to me about
Monte
10,000 times.
It's intense.
It is intense.
Very.
Did he mow?
A lot of tropes that I had never seen. The red bandana. Anyways, that's basically it. Gasoline, corn, not a whole lot exciting. So, trading's not always, oh, I gotta I gotta feel something. Like that's not what this is about, man.
No, we're not Davey Day Trader Global over here.
I wish I was.
Yeah, true. Except I wish I wasn't. His trading ability is absolutely atrocious, but he lives a pretty cool life. But Coutinho, I think you're spot on. Also love your name. What are you, Portuguese, Brazilian? Bet you're pretty good at soccer, at least knowledgeable in that soccer. Maybe that's a bit of a leap for me to make, but you got a name like you're you could play for the Brazilian national team, my friend. But I think you're exactly right. We talked about this a little bit on Friday. It's like game theory, right? When everyone knows something, when everyone knows that there's this much soul hanging overhead that's going to be distributed, then it's already priced in. The markets are speculative. They're a discounting mechanism. They don't react to the news after it happens. Once everybody knew that that this much was left to be overhead, and then you're right, once the that estate came out saying that they'll come out and buy OTC, that really kind of eased a lot of the fears, and I think just squeezed out a lot of the shorts. So a combination of those two things is like people were vigorously shorting it on the basis that, oh man, there's about to be a bunch of SOL unlocked that's going to hit the market. But what they didn't realize is like that was already factored into price. And then like you pointed out, that over-the-counter buy of Solana, I think really forced a lot of those shorts to capitulate. So I think you hit it right on the head. But yeah, that is all I got for today. CJ, is there anything else you'd like to add before we wrap things up for the day?
No, I just want to thank everybody for their participation. As always, it's great to see you guys. Hope you have a good week, and hope this market continues to have some good action. So we'll see you back here same time tomorrow, or if you want to catch Trading Rebellion, we're going to do that later today around 1 p.m. Central. So thank you guys, and we'll see you next time.